In this video, we're gonna go over an oscillator version of the Ichimoku Cloud Indicator. We will explore how this indicator works, the best settings to use, and we'll also combine it with other technical tools to create a simple yet profitable scalping strategy. If you find value in this video, remember to leave a like. Let's get into it. Now, this oscillator version of the Ichimoku Cloud is called the Ichimoku Oscillator. To add it to your chart, you're gonna go to TradingView. Then load any trading security that you like in any time frame. After that, open the indicator search tab and type in Ichimoku Oscillator. And it's gonna be this one called Ichimoku Oscillator with Divergences, created by Chart Prime. Now, the Ichimoku Oscillator with Divergences is a trading tool designed to simplify and enhance the interpretation of the Ichimoku Cloud. The Ichimoku Cloud is a comprehensive technical analysis indicator used in financial markets to assess the trend direction, support and resistance levels, and potential entry and exit points for trading. This indicator serves as a condensed and real-time representation of the Ichimoku Cloud components, making it easier for traders who are familiar with the Ichimoku Cloud but want a different perspective on their indicators. Now let's break down its key features and components. This dynamic line that changes color from red to yellow and green is known as the signal line. And then we have these two horizontal levels right here. This upper level is called the overbought level, and it represents the maximum extremity for this indicator's analysis. When the signal line gets into this zone, it indicates that the market is overbought, and it may signal a potential reversal of a bullish trend. This bottom level is called the oversold level, and it represents the minimum extremity for this indicator's analysis. When the signal line gets into this level, it indicates that the market is oversold, which further signals a potential reversal of a bearish trend. Now, to explore the rest of this indicator's components, we need to access its settings. Inside the settings, we can see that we have options like the Chikou line, the conversion and base lines, the moving average, and then we have the Kumo lines. And as you can see, the space between the Kumo lines is filled with green and red background colors. Because of that, we're not going to be needing to show the Kumo lines. And then scrolling through the input settings of this indicator, we can see that we have the ability to change the source, the length for all these options, as well as the colors of all these elements. For this video, we're going to use the default settings. Next, we're going to explore how we can use this indicator to trade. But before that, let's talk about Henko Trade. Now, you may be thinking,
and what exactly is Henko Trade?
Well, Henko Trade is one of the most reliable forex brokers out there, and for that reason, I use them every single day. As you can see here, this is my trading history. I mainly scalp gold, and up here you can see that this is actually a live account. The reason why I love Henko Trade so much is because of their extremely low commissions and spreads. On Forex, for example, the spreads can go as low as 0.0 pips, which is actually the lowest spreads can go. And for those of you who love high leverage, guess what? Henko Trade offers a maximum leverage of 1 to 500. And if that's not enough, they're also going to give you a 100% bonus for all your first deposits up to $25,000. So if you deposit, say, $500, they're going to give you a bonus of $500. So in total, you'll have $1,000 to trade with. To access the bonus, as well as all the other perks, sign up to Henko Trade using the link in the video description. Now, back to the video. There are several ways that we can use this indicator to trade. The first method is to use it to identify bullish and bearish trends in the market. How you do that is by looking at the signal line. Whenever the signal line is colored green, that indicates that the market is in a bullish trend. When it's colored yellow, like right here, this indicates an indecision in the market. A light green color, like here, indicates a weakening of the pre-existing bullish momentum, which basically means that the market is in a pullback. Now, what about a bearish trend? How does this indicator identify a bearish trend? Well, when the signal line is colored red, like here, that indicates a bearish trend. A light red color indicates a pullback within that bearish trend. Because of this, it basically means that we will only be looking to take long positions whenever the signal line is colored green, and only short positions whenever the signal line is colored red. Another way that we can use this indicator to trade is to use it to identify bullish and bearish divergences. But what is a market divergence? You may be thinking, well, a divergence occurs when an oscillator is doing the opposite of what the price action is doing. For example, this is a bullish divergence. As you can see here, this indicator created a higher low right here. But looking at the price action, it was actually doing the opposite. It was creating lower lows. Because of this, we're gonna enter a long position. Conversely, here we have a bearish divergence. As you can see, this indicator created a lower high. Looking at the price, it was again doing the opposite of this. So instead of creating lower highs, it was actually creating higher highs. This indicates a bearish divergence, which is an indication for us to start looking for bearish positions. Now, in order to craft our strategy around this indicator, we're going to use it to identify bullish and bearish trends and to take trades based on pullbacks that happen within those trends. In order to do that, we need to add one more indicator to the chart. On the indicator search tab, type in RMI Trend Sniper. Select this one by TZAC88. Then double-click on it to access the settings. Then on the Inputs tab, change the RMI length to 10 and the positive volume to 70. After that, click OK. The RMI Trend Sniper is a powerful trend following indicator designed to help traders identify potential buy and sell entry points in the market. It combines the elements of the Relative Strength Index and the Money Flow Index to provide a comprehensive view of market momentum and strength. This indicator is composed of a trend ribbon and the buy and sell signal labels. When the trend ribbon is colored blue, that indicates a bullish trend. And as you can see, during the bullish trend, this indicator also changes the bar color to green. On the other hand, whenever the trend ribbon is colored red, that indicates a bearish trend. And during the bearish trend, the indicator also changes the bar color to red. Now, what about the buy and sell signal labels? Well, when the label is colored green, that indicates a buy signal. Conversely, when the label is colored red, that indicates a sell signal. Now, you may be thinking,
But how can we combine the two indicators to take long and short positions?
well, I'm gonna show you. To take a long position, these are the conditions. First, the signal line of the Ichimoku oscillator should be colored green to indicate that the market is in a bullish trend. Second, we need a pullback to happen within this bullish trend. To confirm that, we would need to wait for the trend ribbon of the RMI Trend Sniper to turn from blue to red. We let the market play out and see if that happens. This indicates a market pullback. Then, to confirm the end of the pullback, we need a buy signal to be printed by the RMI Trend Sniper indicator. This is our buy signal, and it indicates that the pullback has ended. Last but not least, we need to ensure that the market maintained a bullish trend during this pullback. Basically, from here to here, we need to ensure that throughout this window, the signal line of the Ichimoku oscillator was colored green. If it turned to either yellow or red during this pullback, that trade setup becomes invalid. For this particular example, we can see that it never turned to red or yellow. It only remained green, which makes this entry a valid entry. So we enter a long position. The stop loss is going to be set just below this blue trend ribbon. And then for the take profit, we're gonna set it at 2 times the risk. We let this trade run and take profit. Now, to take a short position, we're gonna do the opposite. So first, the signal line of the Ichimoku oscillator should be colored red to indicate that the market is in a bearish trend. Second, we need a pullback to happen within this bearish trend. To confirm that, we would need to wait for the trend ribbon of the RMI Trend Sniper to turn from red to blue. We let the market play out and see if that happens. This indicates a market pullback. Then, to confirm the end of the pullback, we need a sell signal to be printed by the RMI Trend Sniper indicator. This is our sell signal, and it indicates that the pullback has ended. Last but not least, we need to ensure that the market maintained a bearish trend during this pullback. Basically, from here to here, we need to ensure that throughout this window, the signal line of the Ichimoku oscillator was colored red. If it turned to either yellow or green during this pullback, this trade setup becomes invalid. For this particular example, we can see that it never turned to green or yellow. It only remained red, which makes this entry a valid entry. Because of that, we enter a short position. The stop loss is going to be set just above this red trend ribbon. And then for the take profit, we're going to go with 2 times the risk. Letting this trade run reveals that it actually hit take profit. In summary, the Ichimoku oscillator with divergences is a powerful tool for traders who use Ichimoku analysis. It simplifies the Ichimoku cloud's complexities into an oscillator format and offers customizable options to help traders make more informed trading decisions. If you're interested in this particular indicator, you can check it out on TradingView and use it alongside your own trading strategy. And remember, the strategy showcased in this video is not financial advice. That's been it for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.